Alternative lending options have existed for hundreds of years in the form of factoring. Today, alternative non-banking lenders provide multiple options for businesses that are unable to secure funding through organized banking.
Currently, investors only fund single-digit percentages of new business opportunity. Organized banking only wants the top 25% of applicants, leaving the vast majority unfunded. ALOs will continue to gain market share in this environment.
Alternative lenders do provide a viable option. They primarily market to existing businesses that have recently been declined for a loan and usually are between a rock and a hard place financially. As long as your business is
Able to show monthly deposit activity over a 3 to 24 month window, or able to show credit card volume over a 3 to 24 month window, or able to show invoices due and unpaid by government agencies or stable companies.
you can borrow money, or more accurately be advanced money, based on a multiple of your average monthly deposits or accounts due.
Most alternative lending sources focus on two things. First, their ability to get money deposited into your checking account within 1 to 7 days.
And second, on the fact that they are not providing a loan, but instead an advance on expected receipts.
This means the advance doesn't show up as a loan on your books, and that sounds positive, right?
Yeah.
Well, some of the downsides of these alternatives are,
Well, advances are treated as income for tax purposes.
ouch, total fees charges of 18% annually are presented to you as 1.5% a month and are a good deal. 36 to 60% or 3 to 5% a month are common, and up to 84% or 7% a month are extreme.
Repayment and other considerations are based on the type of advance.
Factoring or invoice advancing is the selling of ownership in specific unpaid invoices or all your invoices. You receive an advance of 70 to 90% of the invoiced amount within 24 hours of submitting it to the factoring company.
The balance of the invoice is repaid to you, less factoring fees, after your customers paid their invoice in full to the factoring company. The longer the delay between your invoice submission and full customer payment, the higher your cost to factor that specific advance.
The interest rate itself can be applied daily, weekly, or monthly. And when it's monthly, it ranges from 1.5% to 5%, which is 18 to 60% annually. There can also be issues with your customers not liking the factoring company's collection processes.
You are also likely to have customers whom the factoring company simply will not advance because the factoring company considers your client too high of a risk.
Sure. Finally, there are more than a few thousand examples of businesses that start using factoring and become dependent on it like a junkie on heroin, to the point that factoring just becomes a permanent cost of doing business.
The next type of advance is an ACH, or an advance based on a multiple of average monthly deposits into your business checking account. The fees start at 35% and rise quickly.
Typically, repayment requires an automatic daily withdrawal from your business checking account over a 2 to 9 month window.
An example would be a $10,000 advance plus a 35% setup fee, which repays $13,500 divided by 150 days, which means they'll be withdrawing $90 automatically from every business day.
Another type of advance is an MCA, or an advance based on the average monthly deposits from your credit card merchant account. These fees also start at 35% and rise quickly.
Typically, repayment requires a fixed charge to be withdrawn from each credit card sale. A set fee designed to repay the advance within months.
An example would be a $10,000 advance plus a 35% fee repays $13,500 divided by the number of monthly sales historically received. So if you average 900 sales a month and the repayment period is 3 months, that'd be 2,700 transactions. Take $13,500, divide it by 2,700, and that's $5 deducted from every credit card sale.
Alternative lenders position themselves to offer a solution when the business owner is financially stressed, and traditional lenders are simply not an option.
None of these options work for startup businesses. For options that work before you're in a pinch, visit our site at MoneyMiners.Biz. Thank you.
This video has general and specific information about business lending and is neither offering nor providing specific or individual legal, accounting, or financial planning advice. All business ventures carry risk, and this video mitigates none of that risk. For these and many other good reasons, you need to establish working relationships with excellent legal, accounting, and financial planning advisors. The examples given herein are for conceptual clarification and not a specific representation of any person's results. All credit is issued by independent financial institutions, whose terms and limits will change over time. Your specific results will vary by individual efforts and creditors selected.